Hey mate, so is Bake a good place to start DCA? Right, Bake is an interesting one. I just want to show you the yearly here, right? Well, this is a bullish yearly stop hunt. It's dipping right down, back down into the yearly. The yearly is red, kind of implying that it is a little bit of a knife catch. But if this can pop up and flip green, of course, this year, or if this can be a major low, well, obviously it is a great place to buy. I always do say that it is safer buying into green years, right? But and don't get me wrong, these dips can be amazing buying opportunities if, obviously, you know, say if it closed, just for example, just say it closed there on the year and then the next year continued on its merry way, well, it would mean you caught the low. Of course, this could pop up and flip green, but let's just mark that just to have a look at it. Well, you can see there where it actually, you know, this was a yearly resistance, and that's why it couldn't break through it. Now, the other thing is these patterns here with the white 100 moving average, it's quite normal to be chopping in and around this before getting the real move up. You know, we see it time and time again. Of course, it needs to hold that white 100. Now, piercing it is okay. What it's doing right now, this is okay to pierce it, but breaking down below it is considered bearish. And if it does break down below it, there's a chance it sees new lows, right? There's a chance it goes. Let's do that a bit better. My voice is a little bit raspy. I've been trying to not make too many videos, but just to heal my voice a bit. But yeah, so you don't want to see it break down below the white 100. Otherwise, it's got a good chance of going to new lows and stop hunting here, right? So you know, it's obviously still down massively. Bake was a big drop. This was down 98% or so down here. You know, it's up to you. Like, if this wasn't going to hold here, are you willing to add below here? I didn't draw it very well, but below this low here, so you can lower your average down. If you're willing to do that, then it's not a bad place to start averaging in. You know, I always say be willing to add lower if you're going to start down cost averaging and accumulating a coin. In bull markets, these are generally great places to buy, in theory. But I'm just saying the yearly is red, and that is not ideal. But so it needs to pop back up here. You know, it needs to find some strength here and pop back up. If you want to be more safe about it, you know, you could try and trade a new green monthly candle if you're looking to be safe about it, or a new green quarterly candle. You know, but if it's going to do something like that, the problem is if it's going to do something like that, it's probably going to bounce from here first. You know, and then you're not going to catch the low. So that's the tricky part about buying down here. You know, is this going to hold? That's the $1 million question. It's red on the yearly, red on the 6 month, red on the 3 month, red on the 9 week, red on the monthly, obviously red on the 2 week, and red on the weekly, of course, as well. So, like, in theory, yes, it is a good place to start down cost averaging, but because it's red on every single time frame, I think that you need to be willing to be adding on a stop hunt below this level, right, in case it does actually break down. We don't know how this war is going to affect the market. Is it going to tumble the stock market? You know, there's a few unknowns here at the moment, but generally, normally, this would be a decent place to be starting to DCA. The other thing I just want to talk about here is, you know, a 3-day apex, right? This is in a 3-day apex, but there's potentially signs it might fail, right? Now, we don't know that yet. You know, it needs to find some sort of strength and move back up here, and then get that move. The thing is, things usually look their worst before they look their best, before they start looking good again. Things always look like they're going to break down in really pivotal moments. So, you know, we don't have a crystal ball, but ideally this white 100 moving average should hold, you know, in this 3-day apex. Apexes are bullish above the white 100. If it starts to break down below this 3-day white 100, which is also coincidentally the weekly white 100 here, you know, if it does break down below that, it might be going for a double bottom, right, and a stop onto the lows before getting the real move, right? That's a possibility, and I only say that because everything is red here, and we don't know the effects of the war and everything else. So yes, this does look like a fantastic place to be buying, because, you know, dips here are still bullish above this yearly bullish stop hunt. So these dips technically are still bullish dips that can move back up. But I'm just saying, worst case scenario, if somehow it doesn't hold, you know, if you're, this is a good place to be down cost averaging, but if it doesn't hold, you know, you need to be willing to add below these lows. That will then give you a very, very good average. It might actually be longer, be even better for you for that to happen, as long as you have the patience. But, you know, it may not break down that low. You know, I'm just stressing. Sometimes in times like these, when things can get harder hit than we expect because of wars, because of a turn in the stock market or whatever else. Personally, I think that the USA will start to print, and things will get propped up, and then things will start to pump. I don't know how long that's going to take, but I think that's the way things will play out. We are having a red 3-month candle. You know, the really, really, really safe way to do it is to buy at the start of green 3-month candles. So I don't know if you want to have the patience for that, or you want to try and knife catch. That's entirely up to yourself. But you can see, you know, if you bought at the start of this green candle, you would have made money. If you bought at the start of this green candle, you would have made money. If you buy into the red candles, they are bits of knife catches. It's not as easy to tell where they're going to stop. Although this is a very important place right now, right here. Look where it dropped into. This is into previous support right here. Making it, in theory, yes, it is a decent place to be starting to down cost average. But again, I just want to point out that breaking below the white 100 can be a bearish sign. So you want to see this holding. So if you're buying here right now, you know, you want to see some sort of move back up and maybe continue and work its way higher again. If this white 100 breaks, well, the likelihood is that we're going to go down and test these lows here.